This is Coindesk Daily. So Bitcoin's two-day rally is stalling as the US dollar gains ground in the wake of President-elect Joe Biden's fiscal stimulus announcement. The US president-elect proposed an emergency relief package worth almost $2 trillion on Thursday. The pullback marks a weak follow-through to the two-day rise of Bitcoin, which saw prices revisit $40,000 resistance. The strength of the US dollar against foreign currencies could be playing a factor. As noted by Coindesk research, the negative correlation between BTC and the dollar is strengthening. Joining me now is Michele Schneider, Managing Director of Marketgauge Group and author of Plant Your Money Tree, A Guide to Growing Your Wealth. Hey there, Michele.
Hey, nice to see you, Christine. Thank you for having me.
Yep. All right, so let's start off with the near-term outlook. Many who view Bitcoin as an inflation hedge thought Biden's stimulus announcement would have increased the price of Bitcoin. Instead, we see that the dollar is strengthening and Bitcoin is going down right now at about just above $36,500. So what's going on here?
Well, and if we're looking at Bitcoin as an inflation hedge, it's really based on what the Winklevoss twins have said, that cash is trash. But we're actually seeing a little bit of a bounce in the dollar. And even though people anticipate that inflation can be sparked by more money printing and more stimulus, it's not really a given that much money is going to get passed, because we still have to get through the inauguration. And even though he's got a majority in the Senate, it's a slim majority, and that assumes that all Democrats would be on board. They would need at least, I think, 10 senators on board as well. So we don't really know. But more importantly, the producer price index came out today, disappointing, as well did retail sales from December during a holiday season. So we have a lot of factors at play. In terms of Bitcoin, though, I like to remove that a little bit out of the mix and say, just from a pure technical standpoint, we had that run to 42. It came down to 30, which I thought was a buy opportunity at that point because of the fact that we really had a target of about 30 to 37. And it's very typical for something to take out a profit target area or a resistance area, go a little bit above and then come back down. So what would be really healthy, actually, and something that Bitcoin doesn't see very often because of its volatility, is some actual consolidation, maybe between this 30 and 37,000. And that would be probably the healthiest thing, and also not so surprising considering there's a lot of talk about what's going to happen if we get some kind of an IPO, a Coinbase type IPO.
Right. You know, in your book, Plant Your Money Tree, you advised people on personal finance and how to grow their honeypots. Would you recommend adding Bitcoin to the home stock portfolio? And if so, at what percentage?
We've already added, what's interesting about Bitcoin is we have a lot of clients are older millennials and baby boomers who are terrified to actually go and put in a credit card and buy Bitcoin. So we've actually done it through some of the companies like MicroStrategies, for example, which was a financial consulting company that went strictly to Bitcoin. We got into that. We also bought the over-the-counter grayscale GBTC, and that's the way we've been doing it. So we are already in those areas. In terms of going forward, would I recommend actually going into Bitcoin? At this point, I would be really curious to see what happens. I also read that the Winklevoss twins are looking at the Gemini crypto, taking that public. Some kind of a standardization for people to be able to really merit by trading in the Bitcoin space that is SEC regulated could have a negative effect, but it also could have a huge positive effect because it might attract a lot more investors.
That's interesting. So you're not actually buying a Bitcoin, but you are buying into stocks that are Bitcoin positive, shall we say. You're an award-winning stock picker. Are the equity markets correlated with Bitcoin? And if so, which sector? Does it move like a tech stock, more volatile, high growth, or does it resemble gold, commodities, industrials? Do you think it behaves like gold, a store of wealth, a hedge against inflation? What is Bitcoin's value proposition there?
Well, actually, it's a really good question because I think it's a little, again, a little more complicated. Obviously, it's tech based and currency based because it's replacing currency. As we know, with there's a cap on how much Bitcoin. There's a 20 million token cap, unlike the dollar that they can keep printing and printing and printing. So that's really where the inflation hedge has come in. And there's been a lot of discussion on whether or not it's the new gold. And we'll get back to that in a moment. I think it does trade like a commodity. I was a commodities trader on the floor back in the day and saw incredible moves throughout the years in oil, in gold, in silver, in sugar, coffee. That's exactly how commodities trade because they're not tied to shareholders. They're not tied to what happens with earnings or CEOs, just like Bitcoin. And so that's what makes it really exciting and really volatile. I'm loving it because I enjoy that volatility. So yeah, I'd say if anything, it resembles more the commodities. And then, of course, you have these companies like Square that have also used Bitcoin, Riot, and what we just talked about, MicroStrategies. Now, as far as what I believe that Bitcoin is going to do from here is I still think overall it's very, very bullish. And I do believe that we are heading into a stagflation, which is different than an inflation. And that will be interesting to see what the impact on Bitcoin is at that point.
Interesting. I also saw a tweet of yours. You said that yields rose recently and the dollar has found some support, but Bitcoin all of a sudden became the big hedge, which is fine, but ultimately gold and silver will go much higher as inflation indicators continue to rise. Requires patience, good risk management, and knowing when to add. So what is better, gold or digital gold in this case, Michele?
Well, first of all, thank you for watching my tweets. How I'm honored. Uh, well, yes, I do believe that gold is not going away, and that it's still considered a hard currency, and it's still a commodity, and that there's also a limited amount of gold. You can't make more gold. So I think that at some point, and silver as well, there will be a switch to more old school. But at this point now, the inflation indicators are still so low. And there's one other thing that I'm not really sure how this is going to play out. We've already seen where Bitcoin has become a hedge when we've had any kind of geopolitical strife. Like, for example, when we had the riots last week, Bitcoin rallied and gold didn't do anything. So that would be another factor to watch as we go into this year. If we have any other type of geopolitical strife, whether it be domestically or globally, and of course, as we know, anything is possible. The new administration leaves itself open to things that the Trump administration really basically handled actually kind of well, which was keeping us out of war for the last 4 years. I think gold would be where people would go in real fear and not necessarily Bitcoin, or it could be both. I'm not really a big fan of this one versus the other because I really believe that each one has its own function. And right now gold is out of favor, but that doesn't mean it won't change.
All right. And finally, Michele, you mentioned a price target in the 30,000 range. What about your long-term view for Bitcoin this year?
Well, I think we can definitely, if we can hold this 30, because if we can't hold 30,000, then we may dip back down to around 24,000, and I would be a buyer down there. So I really believe that at this point now, if we can get through this 40, 42, just round numbers, psychologically 50 might prove as some type of resistance, but I don't see any reason why. And I know some of these lofty claims that it's going to 100 to 200,000 seems absurd. But again, when you're talking about something that's more of a commodity based and not tied to shares, then it's very possible. So I would say, yeah, we're going to see way more upside. It's just a matter of getting through some of these thresholds.
Excellent. Thank you for your insights, Michele.
Thank you.